Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 2nd, 2025, and we're diving into nVent's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss nVent's performance, especially given their strong start to the year.
Absolutely. nVent, a leader in electrical connection and protection solutions, has just released their Q1 2025 earnings. Let's break down the numbers and see what they mean for investors. Revenue and profitability overview. Let's start with the top line. nVent reported net sales of $809 million for Q1 2025, which is an 11% increase from last year. John, can you elaborate on this growth?
Certainly. The reported sales growth is impressive, with an 11% increase overall and a 2% organic growth. This indicates that nVent is not only expanding through acquisitions, but also strengthening its core operations. The adjusted EPS of 67 cents, which is a 10% increase, shows that the company is effectively managing its profitability.
And what about their cash flow?
nVent's cash flow from operations was $64 million, up 31% from the previous year. This significant increase in cash flow highlights the company's strong operational efficiency and its ability to generate cash, which is crucial for funding future growth and returning value to shareholders.
Strategic initiatives and acquisitions. nVent has been active on the strategic front as well. They completed the divestiture of their thermal management business and acquired Avail Electrical Products. How do these moves position the company for future growth?
These strategic moves are pivotal. By divesting the thermal management business, nVent is focusing on its core strengths in electrical connections and protection. The acquisition of Avail Electrical Products enhances their position in high-growth sectors like power utilities and data centers. This focus is reflected in their raised full-year guidance, with expected sales growth of 19 to 21% and adjusted EPS between $3.03 and $3.13.
It seems like nVent is positioning itself well for the future.
Absolutely. These strategic initiatives are aligned with their goal of becoming a more focused and higher-growth electrical company.
Operational efficiencies and future outlook. Despite the positive sales growth, nVent's operating income saw a slight decline. Can you explain this, John?
Yes, the operating income was $130 million, down 1% from last year. However, the adjusted operating income increased by 4% to $162 million. This discrepancy is due to non-recurring expenses related to restructuring and acquisitions. The adjusted figures provide a clearer picture of the company's operational health.
And what about their free cash flow?
nVent's free cash flow was $44 million, up 32% from the previous year. This increase is a testament to their efficient capital management and operational improvements, which are crucial for sustaining growth and shareholder returns.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 66 for nVent, based on a survey of 4 analysts. How did the actual results compare?
nVent delivered an adjusted EPS of 67 cents, slightly beating the forecast. This beat, although modest, reflects the company's strong execution and ability to exceed market expectations, which is always a positive signal for investors.
It's always encouraging to see a company outperform analyst expectations.
Indeed, it reinforces investor confidence in the company's strategic direction and operational capabilities.
Key takeaways. As we wrap up, nVent has shown a strong start to 2025 with impressive sales growth, strategic acquisitions, and a slight beat on EPS expectations. John, any final thoughts on nVent's investment prospects?
nVent is well positioned for future growth with its strategic focus on high-growth sectors and operational efficiencies. The raised full-year guidance further underscores their confidence in sustaining this momentum. It's a promising outlook for investors.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on nVent's performance in the comments below.